Hello? Bollocks, I've only just read the messages in the chat, so thanks for letting me know that there was no sound. I've just been talking to myself for the last 5 minutes. Anyway, I'll start again. Okay, welcome to another technical analysis update. Today is the 10th of August 2022. It's a very big day as we've got the July CPI print, which is Consumer Price Index. This is the main measure of inflation. So therefore, it's going to be potentially a catalyst for some volatility in the markets. Now, apologies for the sound thing. The microphone was on or whatever, but the settings here on OBS for some reason didn't kick in with the sound. So I do apologize for that. So anyway, let's crack on. I've got here basically the stock market heat map, and the stock market heat map is showing us that basically there's a lot of unwinding, just like I said to you guys on Monday, leading up to the CPI. A lot of positions would be unwinding, and a lot of people will be closing their positions because obviously there's going to be extreme volatility. So therefore, this is natural to see. Okay, a lot of it is in the red, some of it is neutral, and there's very few here in the green. For the cryptocurrency heat map, there's quite a lot of red or neutral, very few in the green. So because we had a nice little pullback here on Bitcoin, nothing extreme or anything, but in crypto we definitely saw a pullback in the last sort of day or so, which after a week of rallying, or after a couple of weeks of rallying, it's not really a big deal. But nevertheless, let's move on. Now with the calendar, you can see that basically we've got here the dates for the core CPI, which is today at 1:30 p.m. here in the UK. That's 12:30 UTC. Okay, so that's around about just less than 2 hours. Okay, just under 2 hours. Now the CPI, like I said, is the Consumer Price Index. This is the main measure of inflation. And basically these figures are kind of important because it lets us know if the Federal Reserve is doing enough with all the interest rates hikes and the quantitative tightening and the runoff of the balance sheet and everything else that they're doing in order to trying to contain inflation, which is basically their mandate. That's what they have to do, right? So the forecast rates are currently at month-on-month 0.2 for the CPI and 0.5 for the core CPI. The only difference between this is that one includes the food and energy prices and the other one doesn't. Now, if you don't know, if you want to read more about it, you can click this little folder on the website. The website's called forexfactory.com. And you can click here on the top on the calendar, and you can click on all these things, including the chart. You can do this, for example, and you can just click. It's an interactive menu here, so you can actually click and read and educate a little bit more about it yourself, right? But the important thing I want you to focus on is these rates, okay? So 0.2 for the CPI and 0.5 for the core CPI. Now, there's another website called Inflation Nowcasting, okay, which is actually part of the Cleveland Fed. So this is the Federal Reserve Bank of Cleveland, and they have a projection, if you like, for what is expected. Now, what is expected for July, which is basically the print that's coming out today, it says here for the CPI is 0.27, which is ever so slightly above what is forecast on this website. And for the core CPI, 0.48, which is slightly below what is forecast on this website. Okay, so nothing really extreme. So this leads me to believe, if this is anything to go by, and if this is actually accurate, it means that today will probably be a nothing burger, which means that there's all these people looking at this, waiting to enter their positions, when in fact it'll probably be a nothing burger, meaning that nothing will happen and the numbers that come out are exactly the same as what's being projected, or very close to what's being projected. And if that's the case, then I do expect the markets to rally. I don't think there's a change. There's not going to be a huge change in market structure if that happens, because basically they're the same rates that have been forecast, and that will be seen as the Federal Reserve is doing its job, right? That inflation may have peaked, etc. Now, if the rates come out negatively, meaning below what's been forecast, then the markets will rally tremendously, because obviously that means that that's definitely peaked. The inflation has peaked. The Federal Reserve has been very, very aggressive, and whatever they've done so far with raising interest rates right by 10 basis points and by 75%, etc. 100 basis points, 1%. what that means is that basically it would have been seen as they've done enough. Okay, so if the rates come out lower than what's forecast, then you can expect the markets to rally. Lower or equal, right? If the rates, however, come a little bit higher, right? So let's say that this forecast is 0.2, this comes out at 0.3 or 0.4, then we are most likely to tank the markets, okay? And that's just because it's it's above what is expected, meaning that inflation is actually above what has been forecast. And of course, that means that the Federal Reserve are not doing enough to contain that inflation, okay? And that there's no sign of it being curbed so far, right? This with the backdrop as well of the global consumer prices going up, rising food prices and energy prices globally. There's talks about a global recession. There's all this backdrop of chaotic maelstrom happening in the background. War in Europe with Ukraine and Russia, the tensions with China. There's all these sort of moving parts in the background that cause a lot of fear in the market. Now, luckily, we haven't seen a lot of volatility because a lot of the traders are on holiday because this is the summer, of course. There's a low liquidity in the markets. The volume's down. But it potentially, this could be disastrous if the CPI print comes higher, right? So meaning that if inflation is higher than what is expected. So I want you to keep that in mind. And I will look at the charts in just a second because that's really what matters to me. But I just wanted to put a little bit of context of what this means in the CPI. I'm by no means an expert. This is just my understanding of it. I'm not a financial advisor. I'm not even that versed in terms of traditional finance. But I've just been studying and reading, and basically I'm just sharing my my view on it and my interpretation of it, and I hope that you guys can sympathize with that. Okay, so again, equal or lower than forecast, I think the markets will probably rally or at least continue to go in the same direction that they have been. It doesn't mean we'll see a massive pump, but it'll continue going in the same direction. If the rates are higher than what is being forecast, then I do expect the markets to tank a little bit. And we'll have a look at the charts to see where those targets will be, okay? What I want you to also pay attention is that in the minutes leading to this, at 12:30 p.m. UTC, you're going to see extreme volatility, right? And what I mean by that is that in the chart, you'll probably see something like the chart is doing this, right? Maybe a little bit lower, maybe a little bit higher. And then suddenly you'll see a peak to the top and perhaps even a peak to the bottom, even if the markets come straight back to where they were, right? And this is why I'm saying, like, perhaps reduce exposure. Do not try and trade this, because a lot of people end up losing shitloads of money trying to trade this. And with this kind of volatility, sometimes it is very irrational as well, meaning that the first move is always wrong, right? So it's not always the case. I've been observing this for a while, and sometimes the first move is right, and basically what it does, it will do something like this. It will go up, and then it'll go down, and then actually it will go back up again. So what I'm saying is that you'll see an overreaction at first when the figures first come out. So just reduce exposure. Perhaps even don't trade this and wait for the whole market to settle down, and then perhaps you can enter your positions. Okay, but again, I'm not a financial advisor, so don't listen to me. So with that said, let's move on to the charts. I'll check the chat again. Hey, Jason's in the house. Hey, bro, good to hear your voice too, man. Well, good to hear from you as well, man. It's been a long time. So I hope you've made a swift recovery. Right, so we start with the S&P. Now, this is the correlation chart, of course. It's the 4-hour chart here on for the S&P 500 index. And in orange, we've got here the Coinbase BTC USD chart, okay? So basically, the blue line is the S&P, the orange line is Bitcoin. And you can see that the markets have been very much kind of correlated, and they're still very much correlated, even though the S&P is looking a little bit more bullish with this parabolic run, whilst Bitcoin is kind of like a little bit sideways and a little bit flat, right? In fact, here we're doing equal highs when the S&P has actually been going higher highs and higher lows. So make of that what you will. There's definitely a divergence there, and perhaps it's just a reflection of the dynamics of the market participants. But either way, it's it's usually very well correlated to the downside. So for example, when you see a drop like this, then you'll see a drop in Bitcoin. When you see a rally, you tend to see a rally on Bitcoin as well. Okay, sometimes the drops here, for example, were very well synchronized, and sometimes Bitcoin will go up and then the S&P will actually lag behind and actually will rally then after Bitcoin. Sometimes it will lead, sometimes it will lag. So here for example, the S&P rallied and Bitcoin continued lower, right? And it didn't rally at all. So there are divergences. This is not like a silver bullet or anything like that, but it's interesting to keep an eye on this, and it's interesting to see that the S&P is definitely still very much correlated with Bitcoin. So with that, let's start with the S&P. I'll look here at the weekly chart, and you can see that we've pretty much not broken anything in terms of market structure, right? We're still waiting to break these previous highs. I've been going over this for quite some time now. This is the high, this is the low, higher high, lower low, lower high, lower low, lower high again, lower low, and here we are now. Now, the only way that we break market structure is actually by breaking above this previous high here. So that means going to this yearly VWAP here, around about 4,280 points. And if we do that, then at least, even if we do pull back, at least I'd like to see a nice bit reaction here around about 4,000 points as support to print what would be seen as a higher low. Okay, and that would be the market structure: a higher high and a higher low after a trend. That's a trend change. Okay, so that's basically what we're seeing and what we're expecting, but we're not seeing that. We've not seen a change in market structure at all, right? So basically we have to break above the 2021 VWAP, which is this line here, which has been acting as resistance, before we see any change in market structure. Okay, and then we'll have to see. This is the first indication that it's broken market structure, but actually the confirmation of that is on the pullback we print a higher low. So we'll just have to wait and see. Either way, like I said to you guys on Monday, we are inside this high volume cluster here, and as long as we stay above this low volume area around about 4,000 points, I think that the direction is up, and we're looking to go up to 4,300 points. Okay, so unless the figures coming out from the CPI are really bearish and the inflation is a lot higher than what they expected, I think we're going to carry on upwards to around about 4,300 points. Okay, so that's on the higher time frames. Now, on the daily chart, that was the weekly chart. This is on the daily chart. I've got a quarterly VWAP here. You can see that basically we broke above the previous quarter VWAP, which is a static level here, which basically the quarterly VWAP closed here, and we broke above this, and we've been holding it as support. It's not been tested since, but we tested it here on the 2nd of August. But it has perfect confluence with this low volume node here around about 4,080 points, and as long as we are above this, I do think that we've got move to the upside. So moving on that to the 4-hour chart, and if we see here, we're basically inside the current month's value area. Okay, so this is the monthly VWAP, and we're inside that current month's value area. Okay, so basically we did rally above, we confirmed it as support, then we came back straight back inside, and we've been rotational inside it. Okay, again, we deviated above here, we got back inside, we couldn't break back above it, therefore we go straight to the other side of balance. And then here at this side of balance, we've just been kind of holding a support for quite some time. And I'm going to make this a little bit bigger so you guys can see how accurate this really is. Right? So as you can see here, once we deviated above and then we fell back inside of the value, we got rejected there so many times that, okay, the only way that this is going to work now is if we go to the other side of value, even though we've tested the VWAP here and we bounced. That's exactly where we went to. We went to the other side of balance, and of course we bounced there. Okay, and again here we've bounced as well. Now we are testing the current month VWAP, right? So if we lose this, then we're heading back here again, around about 4,100 points. If we hold it as support, then again we go back to the highs and see what happens there, 4,150 points. Okay, so that's what I'm seeing here on the 4-hour chart, and more importantly, what I'm seeing also on the 4-hour chart here is that we're definitely printing higher highs and higher lows, right? So you can see this has been the trend since July the 14th. With this being the low, this being a high, higher low, higher high, higher low. Constant higher highs and higher lows here, even on the pullbacks. So, you know, be under no illusion. I mean, you can definitely use context and think, okay, you know, the world looks like crap, and you know, it looks like we might be heading for a global recession or whatever. But either way, this does look bullish on the smaller time frames. Okay, there's no two ways about it. The chart is telling you that this wants to go up. Okay, so of course, if we lose this level here, then the last line of defense is around about, like I said, 4,000 points, right? And that's basically this little consolidation here. We've got a little order block there, a little FTR if you like, around about 4,000 points. And that means we would retrace pretty much this whole larger liquid move here. And we could potentially bounce here. Now, because this is low volume, it's very likely that we'll travel very quickly through there. So in today's volatility, I wouldn't be surprised to seeing a wick as low as this, but then I'd like to see a quick bounce straight back up, because if we don't see that bounce straight back up, that means that even if it goes to here and then cannot get back inside of this value here above 4,100 points, which is basically inside this volume cluster here, if we cannot get back above 4,100 points, then I'm afraid that we're going to go straight back down again. So we'll just have to wait and watch this carefully. But yeah, that's basically what I'm seeing. You know, we've got a little bit of consolidation going on here. This is basically where we are right now. We've got a high volume cluster there, just like I showed you on the weekly chart. And that's basically it. So, you know, just like you've seen here, we're inside this high volume cluster here. So as long as we are inside of this, then we'll rotate inside it, just like a range, okay? So what we'll look for is this as support here, and this low volume node around about 4,300 points as resistance, okay? There's not much more to it. So we'll just have to wait and see what kind of reaction we get from that CPI print. As for Bitcoin, now I'll start with the weekly chart because I wanted to pay attention to this 200 weekly simple moving average, and you can see that even though we've reclaimed it, we're kind of toying with the idea of breaking back below it again. Okay, we're right on that, and this is on various charts. It's not just on the Coinbase chart, it's on the index chart as well. We're currently sitting right there on the 200 weekly. Okay, so this is, you know, it's significant. Of course, historically, let me just show you this. I showed you guys this on Monday. But I'll do it again. I'll just take the view apps off so it becomes less confusing. Right. So you can see that historically, this is the oldest chart in existence for Bitcoin. You can see that historically, let me just take the volume profile off. Historically, the 200 weekly moving average has been bouncing in support. Okay. Here, for example, this is the COVID dump in March 2020. When the markets went into panic because of the COVID restrictions, etc. And of course, we kind of like broke below it and deviated below it. But once we reclaimed that, basically just like the following week, as soon as we reclaimed that, we rallied from there. Okay, so historically, the 200 weekly has weight. Okay, so this has been historical support for quite some time, and here we are now. We deviated below, we've reclaimed it, and now we're standing right on it. Okay, so, you know, this is why it's important to see what's going to happen in the traditional finance markets, because if the S&P tanks for whatever reason, for the CPI print or whatever, and drags Bitcoin down with it, then we're going to be back again below this 200 weekly. So this is important to pay attention to, and this is why I was kind of highlighting it here. Meanwhile, let's just look at the weekly chart as per normal. I'm going to put the view apps back on and take this moving average off. Volume profile, and there. So in fact, I can leave the moving average there just so that it stays visually there. So basically, in fact, I'm not. What I want you to pay attention to is the fact that we still did not manage to get inside the current year's value area low. Okay, so this is a 2022 VWAP. This is the value area low, or the -1 standard deviation, and of course we've been rejected there many times now, at least 4 times. At least on the weekly here it looks just like a couple of times, but we've been rejected here. Like there's 3 candles there, and there's 2 candles there, so that's 5 candles in total that we've been rejected there. So markets really do not want to accept above that $24,000 level. Okay, so that's the first thing to notice as well. The other thing to notice is that the weekly closes have dictated pretty much where we kind of been going from inside week to rallying above the weekly, and then just kind of like going below it and above. And this weekly here has been really ambitious. I mean, we've gone through this weekly level so many times now. It's kind of hard to put it into context. I mean, for me, the important thing is that we're inside this high volume cluster, right, between $22,500 and $24,000. Okay, so $22,500 is acting as an important level of support right now. Okay, so we've got this volume cluster here, and we've got this volume cluster here. What you'll notice is that these weekly levels do get a nice little bounce, right? So for example, this one got revisited here, and it caused a nice little bounce where we rallied on to new highs. Now here we're starting to see a little bit of weakness. You know, we were printing higher highs and higher lows, and here we've printed a higher low. It's not over yet. We've not printed a lower low. We've not printed something lower than that one, right? So this is basically, it's got perfect correlation with this little level here at 22,500. And if we lose that one, then I think we're going to get stuck inside of this volume distribution, somewhere between $19,600 and 22,500. So I'm starting to see a little bit of weakness with this lower high here, but we've not broken market structure, so this could definitely go up here. If the markets come out positive, if the CPI print comes out positive, then 23,300, which is this weekly level, needs to be reclaimed, and probably will be reclaimed. And if so, this will then be your next level of support, and we'll be having a good chance of going all the way to 27,500, which is where this little high volume node is here, right, which is very close to 28,500. The reason why I'm pointing out 27,500, I'll point it out again in just a second. And I'll show you on Exocharts, which is a little bit more visible. There's basically a naked point of control that we've got on the volume profile. So there's one there, and that would be the perfect level to kind of front run everybody that's expecting 28,000, which is basically the bottom of this high volume cluster, which is basically this level of support here, right? That's been untapped as resistance. So this will be a high probability trade. If we do go up there, this will be a high probability short, because previous support tends to turn to resistance. So if we do get to the edge of this balance here, do not go long. This is perhaps a good opportunity to either take profits on your longs, or at least stalk a short position. Okay, but so you got levels for the upside. We got 27,500 and 28,500 potentially targets if we do have positive news and if this tends to rally. And again, highlighting the fact that this has got hardly any volume, so the markets, if they do go all the way up there, they'll be quick, just like here, larger liquid candle, and these larger liquid moves tend to get retraced, right? Even on the shorter time frames, like this one here got retraced, right? So this one here got retraced straight back up. This one here hasn't yet, so but I'll get to that in just a second. So I've got targets for the upside. Like I said, low volume here, so we could definitely rally all the way to $27,000, $28,000. Okay, so you got to be prepared for that. So be careful with your shorts. However, we are, and we cannot deny this, that we are below this weekly level of 23,300. So if the markets come out a little bit bearish on the CPI print, then I expect this to be strong resistance now. Okay, and the next level of support, like I said, 22,500. Right, which is basically this low volume area here. And if we fall below that, then I'm afraid that we're going to be going all the way down to around about $21,000. Okay, and I'll explain to you why. You can see here that basically we've got a large liquid candle to the upside that has not been retraced yet. Okay, so even if we came all the way down here, that would be a break in market structure, but it wouldn't be the end of the world. Okay, but let's just have a look at the more granular lower time frames, just to see if we can spot where we should be, right? So again, you know that 23,300 is the weekly level to the upside, and 21,000 is the level to the downside, right? So I'm just going to take these weekly levels off, and we start with the daily chart here. The daily chart showing us that we are above the current quarter VWAP. This is the quarterly VWAP. We're also above the previous quarter's value area low. It's been acting as support. Okay, so this is bullish, right? So we are above the quarterly. However, on the daily chart, on the 4-hour chart, and this is basically the monthly VWAP, you can see that this here had been acting as resistance for quite some time. We deviated above here, we confirmed that this was indeed resistance, we tanked, and we basically bounced here on the monthly VWAP, which had perfect confluence with the 200 exponential. Oh no, it wasn't on this chart, sorry, I do apologize for that. So the 200 exponential was here. But anyway, We bounced on the monthly VWAP. We came straight back up. Here we rallied above the June month close, right? Confirmed it as support, and then we lost that. And since losing that level, basically this static level here, around about $23,300, has been resistance for quite some time. Now, you can see from the more recent price action here, right? That was resistance here, here, here. Then the market's deviated above, rallied again, and then larger liquid move, what happens? Gets retraced, right? That larger liquid move gets retraced. We fall back inside of this monthly value here, right? And we're still below the June VWAP close, right? Not only that, now we're also below the current month's VWAP, round about here, so $23,250, $23,300, something like that. Okay, so at the moment I'm starting to see a little bit of weakness. This is the high, this is the lower high, right? We're starting to get below some contextual levels such as the June VWAP close and the current VWAP. Okay, so there's a little bit of weakness going on there, and on top of that we've got this large liquid candle to the upside that has not been filled yet, right? So if we were to see a pullback, I do think that the July VWAP close here around about 21,500, and I've been calling for this level for quite some time now. 21,500 would be the level that I'd be looking for. Okay, look at how it has perfect confluence with this little order block and this little bit of consolidation here, the FTR at the bottom of this impulse. Okay, so if we were to kind of retrace this whole move, that's exactly where we'd go, to 21,500. all right, so that's what I'm seeing here on the 4-hour chart. Of course, we are inside July's value now. Okay, we're just above it actually. So this was the July VWAP close. This is the value area high. This is the value area low, and we're currently just dancing with the idea from yesterday's pullback, dancing with the idea of getting above this. But now we've got this strong resistance. We've got the monthly VWAP here above us, and we also got the July value area high here acting as resistance. If we cannot get back above this and we find acceptance here, then the natural level that we expect Bitcoin to go to would be acceptance inside of this value, which would mean go to the other side of the balance area, which is around about $19,000, $20,000. Okay, but of course there's one thing that can disrupt that, and that's what you would imagine as the point of control, which is the VWAP close. Okay, so imagine that this is a profile like here, like this, right? And this is the laws of balance. So basically when we enter balance and we cannot get back, and we get acceptance inside of balance, we tend to confirm this balance by visiting both sides of the balance area, right? The only thing that can disrupt that is the point of control, which usually sits around about in the middle. Okay, and if you don't understand why I'm using the VWAPs as this, well, it's very simple. It's a volume based moving average. Okay, volume weighted average price. Okay, so I've had some questions. It's like, well, it's not the same as Exocharts, and it's not the same, it's not as accurate and everything else, but I'm just using these as contextual levels. For context, I'm not actually looking to trade these levels directly. I actually trade on the footprint and on much lower time frames, but I'm looking at these as contextual levels. And it was somebody else that pointed out this to me, which is a guy called C2M from Kilmex, and it makes complete sense because it's volume based, right? Which is basically when we look at volume profile, that's volume based, and the standard deviations are exactly the same principle as a volume profile. It's based on standard deviations. So anyway, there we are, enough of the rant. So I'm looking at 21,500 a potential target for the downside, and if we go much lower than that, I'm looking at 20k for the next level. Okay, so that's on the 4-hour chart. Now I did say that, for example, like I said, there's a large liquid candle here that has not been tracked, right? But there's this 22,500 level here, which is the low volume node, as a potential area of support. We've already bounced there as well. Now, I already mentioned the Stalker. This is a 200 exponential moving average, right? And this is on a 4-hour chart, and you can see how accurate it is, right? It's throughout the trend, it's been acting as resistance. Look how accurate it was here. As resistance, resistance, right? Even further up, right? It was resistance, resistance, it's super accurate on the 4-hour chart, right? So that's why I called it the Stalker. So I stalk this line and I have done for quite some time now. I know that moving averages are lagging indicators, I understand that, but you know, they just do kind of work, right? So again, yeah, we had a bounce there which had perfect confluence with this low volume node here at 22,500, and yesterday's pullback we saw the market bounce exactly at round about here at $22,700, which is exactly where that 200 exponential moving average was on the 4-hour chart. Okay, so I just wanted to highlight that to you guys. So as long as we are above this, then we've got a good chance of bouncing here. But once we've lost that, then I think we're going to target this 22,500, potentially 21,500, and maybe even 19,600 or $20,000. Okay, so now you've got targets to the upside that I've already given you in the higher time frames. I've given you targets to the downside, so you should know what to expect here. And basically what we're really sort of like looking for right now is that we're kind of inside of a range here. So bear with me just a second. Let me just change this to range and EQ. We're basically kind of inside of a range here, right? So here we were in the upper distribution of that range. Now we're on the lower distribution of that range. Right? Quite simple. Now, if I take the view apps off and the stalker off, just so that you guys can make a little bit of sense of this, right? If we lose this level, here was a deviation, right? But if we lose this level down here, which is 22,500, where this volume, low volume node is, if we lose this and then try and get back above and cannot get back above, and this kind of starts showing weakness, that's your entry for a short position. Okay, the volatility will definitely cause this to whipsaw, right? So I'm just talking about after the dust has settled. If we are below this range here, below 22,500, that will be resistance, and any retest of that or failed retest of that will be an entry for a short, and you'll be targeting those levels down there, right? Potentially even lower. However, if the volatility sees us having a whipsaw to the upside, whipsaw to the downside, and then a quick reclaim of this range, right? If we fall out of this value, right, of this range here, and we quickly reclaim it, then I'll be targeting a long position and going up there, okay? But I want to see the reclaim of the level. Same thing applies to the upside. If you guys have been here long enough, this is how I always play these things. So if he goes up here, deviates above the range, comes back inside, and then cannot get back out of the range, then this is an entry for a short, and you'll be targeting the other side of the range, right? However, if it does this, comes all the way back down and then starts going back up and gets rejected from this range, this is an entry for a long, and I think we're going to go higher. Okay, so even if it goes lower first, so let's say that it goes this, reclaims it, goes all the way up here, comes back down, and then actually stays above the previous range high, right? Then this is an entry for a long position, and it wants to go higher. What we don't want to see is acceptance back inside of this range, okay? So we've got pretty much two ranges, double distribution there, if you like, okay? But this one's the important one, the lower one, okay? So just, you know, I'm just trying to give you a few little tips on how to trade this, but I'm staying out of the markets today because I've got too much to do. But yeah, basically what we want to see, and this is a perfect sort of like example, right? So if you look at this like this, so we tapped a high, we swept the highs with a deviation, we've come back and confirmed that high, and now we dumped. So this is showing like a little bit of a Quasimodo over and under type of trade, right? So just be wary of that, right? Because this could be definitely a bearish setup here. Right, you see what I'm saying here. So as a high, we sweep the highs, then we come back and confirm this, and this is the entry for the short, and we could be heading much lower, right? So just keep that in mind. So what decides is basically, can we stay above this range here, 23,500, or can we hold above 22,500 here, right? Basically, that's what we want to see here. So I hope this makes it clear. I'll have a look at Exocharts and see if we can spot anything more significant. The important thing here is that there is a bearish setup happening. We are below that that monthly VWAP. We're also below the weekly VWAP here, as you can see. Right, so we've lost the weekly VWAP as well. We've lost that weekly level that I showed you on the higher time frames at 23,300, right, 23,307, which has perfect confluence with the previous week's value here. Now, we've got a larger distribution here on the weekly. This is the weekly VWAP close here. Been acting as support, and it's acted as support a number of times, even though we deviated below. Look at where we bounced again. See the line there? See how this is all got a little bit of confluence. Let me just see if I can make that line brighter. So there's this one here. Right, you see that line there? Look at where the price bounced. To the dollar. Right? Or almost to the dollar there. Right, so, you know, this is an important contextual level. This is why I look at these levels, and you can argue that Exocharts is better. That's I wouldn't disagree, but I'm just saying this is why I look at these levels. So, again, I lost the trail of thought now. But, so we bounced there. We're inside of this value here now. Okay, we deviated above. Once we came back inside, we confirmed that this is indeed resistance, and now we've just tested the VWAP close for July, right? The weekly, the last week of July's VWAP close. If we lose that, then we're going to go to the value area low of that week, which is, surprise, surprise, $21,500. Now, if we look at that, we just take those brush marks off again, right? I'm looking at 21,500, right? Which is this line here. Let's look at that on the weekly chart. Look at where that happened. The weekly VWAP. Right at the bottom of that. So that's confluence. So the July VWAP close has perfect confluence with the value area low of the last week of July. Right? So that's a confluence level around about $21,500, and that's basically why I expect the price to go if we do indeed lose 22,500. So I hope this kind of makes sense. I made a bit of a dog's dinner out of that, but I hope it makes sense. We're definitely in a bearish setup, and the invalidation of that is breaking above this level here, 23,300. If we can break above 23,300, then I think that we've got potential to go further up, right? But we want to see if how it all plays out. So the main thing to take away from this is the CPI print was going to bring volatility, and it will bring volatility. And so you perhaps just want to wait until the dust settles and see what happens there. Okay. On the Exocharts, moving on to the order flow. On Exocharts, you can see that we've left a few anomalies above. We've got a naked point of control at 24,500. We've also got a point of control at $24,000, right? And there's not much in the way of sort of visible anomalies here to the downside on the volume profile. Okay, there is a naked point of control all the way down at $19,700. Isn't that interesting, right? So, but that's way below there, below 20K. So the bearish setup could definitely set us up to go all the way down there. But I'd be very surprised if we do not take these higher levels first. Right, so again, with the volatility coming in the markets, and this is why I'm staying out, we could see something like market goes all the way up to here and then just tanks, right? So I don't want to stay in this unless I actually I'd rather enter when it's all kind of settled and said and done, right? So let's have a look at the market profile and see if we can actually make any sense out of this. And I'm going to try and keep it really simple because I know I've gone on too long about Bitcoin on the candlestick charts, but I'm just trying to sort of add context. Now, okay, so the first thing to notice here, two things that I want to highlight here, is that I highlighted to you guys on Monday, and you can go and look back, that these guys were trapped down here, right? Key contextual level, everybody got trapped short down here. So when the market tanks and comes down to where is expected to bounce, not only is it a key contextual level, which is that previous week VWAP close, but it's also where a lot of shorts were trapped there. And of course, that's where we bounced, like almost to the dollar, right? I mean, I can put a line here. Okay, so it's like it's almost to the dollar there, right? So that's basically where we bounced there. I mean, it doesn't really get much more confident than that. But anyway, the important thing is that we've left some poor highs, anomalies above. So we've got a poor high here. We've got yesterday's profile is also a poor high, and we've got a naked point of control at around about $24,000. Now, you will also notice that we've left some single prints here, just around where the weekly VWAP is, $23,500. Okay, and a session VWAP closed there as well. But let's just focus on the main ones. So we've got poor highs above. We've got a naked point of control at $24,000, and we've got some single prints that usually get filled at around about $23,500, $23,600. The important thing to notice is that yesterday's profile, this was the value area low here, and we've already been rejected there. So even though we kind of opened inside yesterday's value, right, the open was here, we fell out of it during the night, we come back to try and test it, and it's been acting as resistance, right? So this could potentially be as high as we get today, okay? But like I said, if we do break above it and we break back inside of this value, then we've got all of these levels to the upside. We've got poor highs at 24.3, we've got naked point of control at 24, and we've got 23.5 as some single prints. Now, levels to the downside. Yes, we've already cleared out these guys that were trapped. We've got a session VWAP here at $22,000, and we've also got some single prints at around about $21,800. Further down, if we look at this carefully, you can see that we've got a lot of trap shorts. All right, let me just make this a little bit bigger. So we've got some trap shorts down here, and that's sitting at around about 20,000. Let me just put the price things back on so you guys can see. So I'm talking about these levels here, and that's around about $20,500. Okay, so we've got a session VWAP there, a naked value area low. This is also a poor low. This is a poor low here. We've got a naked point of control at 21,800. We've got, like I said, sorry, 21,100 or 21,200, somewhere like that. We've got some single prints at 21,800 and a session VWAP at around about 22k. Right, so these are all targets to the downside. You've got some targets to the upside as well with these poor highs, right? And we've got these poor lows here as well that have not been completely taken yet. Okay, so we've got a lot of anomalies to the downside and just a few anomalies to the upside. So if the news are negative, I wouldn't be surprised to see this kind of rally to the upside, take all of that crap out, correct all those anomalies, and then still tank and go and take these out. Okay, but if the market news are positive, then of course we might not even see a pullback. We might just see a little bit of volatility to the downside and then straight back up again. So you just have to pay attention to this, but the market profile is definitely telling me that we've got anomalies to the downside that have been long overdue, especially when we get so close to this pool low and we didn't correct it. And also, especially as we're starting to see some of the contextual levels being lost on the candlestick charts, okay? So the first signs of weakness. So I just want you to sort of like keep that in mind. I'm not sure if this has confused you more or if it's helping you, but I've given you some levels, some contextual levels. I'm just going to rephrase and make it very, very, very quick, sort of like what I think that is likely to happen. Now, we've got a bearish setup here. We're starting to see some, on the lower time frames, we're starting to see some kind of bearish type of price action losing contextual levels. The main one is being this one here, 23,300. If we reclaim 23,300, we're now above the 200 weekly moving average. And not only that, we are also above a weekly level here. Okay, $23,300. All right, so that would be bullish. If we, however, lose 22,500, then we've got potential to go all the way back down to 20,000, maybe even $19,300, okay, and fall back inside of this range, basically inside this volume cluster. And that's basically it. If you're trading on a higher time frame, that's basically all you need to know. We're below a key level here at 23,300, and we've got support at 22,500 until proven otherwise. Lose this one, and then I'm afraid that we've entered this new balance area here, and as such we're very likely to, if we find acceptance below 22,200, then we're very likely to go all the way to 19,300. That's basically it, okay? Yeah, I hope this kind of makes it clear. I'll move on. This is almost an hour long. I'll move on to Ethereum now. So starting with the weekly chart, let's have a look at the weekly chart here. So very clear rejection from the 2021 value area low. This is the 2021 VWAP close. This is the value area high, and we've been very clearly rejected here a couple of times. Right? We are inside what constitutes the current year's value area low, which is that line there. Okay? Right? So if I put this on the daily, you guys can see that. That was previous resistance here. Resistance, resistance. We broke inside it. And then even on this pullback, we've confirmed it as support. So now we're kind of in a really tight range here, trying to get acceptance back inside 2021's value. But we are accepted inside the current year's value. So it's really just all eyes on Bitcoin and just seeing what happens with the S&P. If this rallies to the upside, then there is strong possibility that we go all the way to this low volume area here, around about $2,000. Okay, if we break above that, then the next level that I'll be looking for is around about $2,500, which is where the yearly VWAP is. Okay, so I'm going to put some balance areas here so that you, and again, this is like something some of you guys are new here, so I'm just going to go over very, very quickly. These are basically these balance areas, if you like, are just a reflection of these high volume clusters. Okay, so they're basically the perimeter of these high volume clusters. Okay, so this one here, this one here, this one, and this one. And you can see that basically all I've done is I've added rectangles to highlight these high volume clusters so that you know what are the balance areas. Okay, so that we're not guessing exactly where we're supposed to be ranging, etc., on a higher time frame. So now, you know, it's very clear that we're inside of here. So this one is our current range, right? So that's $1,500 as support and $2,000 as resistance in between this high volume cluster here. So, you know, at the moment we're kind of finding resistance like I said we would, and if you don't believe me, go look back at the videos. This is not hindsight. This high volume cluster here, this is the high volume node of the whole distribution here at $1,800. So $1,800 is the point of control, and it's acting as resistance right now, and that's why we're seeing such strong resistance at this level. Once we break above that, then it's all clear to $2,000 and perhaps even as far out as $2,900, $2,800. Okay, especially with the narrative that we've got on Ethereum with the merge and everything else coming in September. So just keep an eye on that. $1,500 as support on the higher time frame, $2,000 as resistance. Even though we've got a little bit of resistance right now at 1,800. Okay, so if I take the balance areas off and just look at the VWAPs again, let's look here on the 4-hour chart. This is the monthly VWAP again, right? And you can see that this is basically been acting as support again, right? So here we were, let me just start from the beginning. So this was June value, right? We bounced at the bottom, came back, we confirmed that this was indeed support, we bounced again, we came back, we broke above the June VWAP close here very strongly, came back, confirmed that as support, and we rallied. Where did we find resistance? Right on that value area high there. Right? Once we came back down, we bounced, I think it was the 200 week, yeah. Not the 200 week, the 200 exponential moving average, that's exactly where we bounced there, right? And we came back and we broke above June value area high. Confirmed that this is support twice, we rallied again, and now we're above the current month's VWAP. So Ethereum's looking a little bit more bullish than Bitcoin at the moment, okay? Unsurprisingly. So at the moment, as long as we are above $1,500, $1,590, okay, yeah, around about $1,500, it's looking bullish. Okay, I would say $1,600 just to be on the right side. Okay, so $1,600 as support. As long as we stay above this, then we should be heading higher to take that $1,800 level and perhaps go all the way to $2,000. Okay, note that this is a previous level of support, so it's only natural that we're finding resistance there, which is basically what will happen to Bitcoin if we get to 28,500. Now, if somehow we lose these levels here and we lose $1,600, then the next level that I'll be looking for is round about $1,400. Okay, if we lose that level there, that's where we're heading. That means basically getting acceptance back inside of this value here, maybe even inside the whole value of June here, right? And we'll go to at least $1,400, potentially even lower to around about $1,300, which is the edge of this balance area here, right? So targets to the downside are, like I said, $1,500, $1,400, and $1,300, $100 increments. Okay, and these should hold. If we get acceptance back inside of this, then the edge will be resistance and we'll be heading much lower. So let's not think about that just yet. For now, you've got some targets to the downside and you've got some targets to the upside, which is $1,800 being strong resistance and then $2,000 being the next strong level of resistance for Ethereum. Okay, so that's basically what I'm seeing on the 4-hour chart. Here on the weekly, you can see that basically we bounced also on the previous week VWAP close here. And we're above the previous week value. Okay, we're back inside this week's value here. We are currently below the current weekly VWAP, but again, like I said, if we see a strong bullish momentum on Bitcoin, then I wouldn't be surprised to see this rally as well. Okay, we see that basically the same on Bitcoin happened, where basically everybody that was long here, their stops has just got triggered. Okay, so they're probably out of their positions, right? And everybody that went long here at the top is now trapped. So importantly, as you can see that this is a range here, we deviated above the range, we came back inside the range, and now we're heading up to the top there. So at $1,800, are we going to find the rejection? If so, then we're heading much lower. If, however, we break above it and confirm that this is support, like I said, at around about $1,750, then we're out and we're going up. Okay, so it's looking a little bit more consistent here with this big high volume cluster here, and like I said, this $1,775, $1,800 is resistance until proven otherwise, and then way down here around about $1,500, $1,450 is support. Okay, and that's basically all I'm seeing here on Ethereum. So if I look at Exocharts and see if we can spot any confluence in terms of levels on the market profile, we got some single prints below that we bounced from. We didn't actually correct those, which is very strange. But we've also got some single prints above us. We've got a poor high here, round about $1,800, $1,790. We've got a naked point of control at 1770. 1750 is the single prints. Okay, the current profile's got a poor high as well, so we could be correcting these anomalies to the upside. Now to the downside, we've got $1,600 as a single prints. We've got plenty of pool lows below and loads of bullshit down here. We've got the pool lows below all the way to $1,500, and then we've also got a naked point of control at round about $1,450 and $1,400. Okay, these are time-based points of control. So if we do indeed have some downside momentum here, then these naked points of control and these single prints will be the first targets to be targeting. And note how there is some negative delta here where people were trapped short. There's also some negative delta here, so perhaps at around about $1,580 is a level to watch out for if we do indeed get a pullback, right? So you can see that there, right? So that's, where's that? $1,575, $1,580, okay? But we've got poor highs there, we've got some single prints, naked points of control just below. So this is all looking a little bit tricky, but like I said, just level to level, $1,500 on the higher time frame is support, $2,000 and $1,800 are resistance, at least in the short term for Ethereum. But Ethereum's looking definitely a little bit better than Bitcoin. So with that out of the way, let's have a look actually at the volume profile. And in terms of volume, there's no naked points of control above us. Okay, there is that kind of pull high there, but yeah, the naked points of control are below us at around about 1,580, and then we've got those ones, like I said, around about $1,450 and $1,400 as well. Naked points of control to the downside, and then we got some much lower here, around about $1,000. But let's not look at that just yet, because we're still high, printing higher highs and higher lows. Okay, so that's the difference that I also wanted to show you, and I forgot. Here on Ethereum, you can see that we're still printing highs, lows, higher lows, and higher highs, in the sense that this high was higher than this one. Okay, yes, we've deviated below and it does look like it wants to head down, but nevertheless, we've not broken market structure as such. Not like Bitcoin, where it's looking like it wants to kind of like, you know, go lower because we had a high, we deviated above, and now we printed a lower high, right? So just bear that in mind, that Ethereum is looking a little bit better than Bitcoin. Now, Ethereum versus BTC, this is very, very clear here. You can see that Ethereum has been outperforming Bitcoin for quite some time now. We are above the yearly VWAP. This is a trend line that comes all the way back from June. We've reclaimed that very convincingly, right? But we're still struggling with the current value area high here. So this is the current value area low. This is the current VWAP, right? That's the +1 standard deviation, and we're still struggling to get above that. If we break above this, then the next level of resistance will be these order blocks here, right? And those are sitting at around about 80,000 sats, I believe. So that's 81,000 sats there, and around about 84,000 sats there. Okay, so that'll be the next level of resistance. For now, however, this is resistance until proven otherwise, and this is going to be strong support because there's a yearly VWAP and a trend line. So the range right now is somewhere between 70,000 sats and 75,000 sats. And like I said, break above it, this will be the next level, 80,000 sats. If we break below it, the value area low of the current year should serve as support at around about 64,000 sats. However, I do expect this range to hold for quite some time now, okay? Especially to the downside because we're above the yearly VWAP. So that's basically it on Ethereum versus BTC on the weekly time frame. If I just delete some of these brush marks, and I'll show you this on the 4-hour, there's that level of resistance that we're looking at, the higher time frame level there, right? And we're still kind of printing higher highs and higher lows, right? And we're above the monthly VWAP. We're above the quarterly VWAP, which is in the top right hand corner. We're above this quarterly VWAP as well, above the monthly. And looking at the smaller time frame, which I only use for intraday trades, we are also now back above the weekly and daily VWAPs. Okay, and note how the previous week balance has been acting as support. Support. Okay, so around about 73,000 sats, like I said, right? 73, 74. So this has all got like a little bit of confluence, and I do think that it just got more room to go to the upside. I don't think it's going to come down, but I could be wrong, of course, with the volatility of the markets. So just bear in mind that Ethereum is looking really, really quite bullish. Okay, so yeah, I hope this was useful to you guys. I'm not going to do the DeFi coins just because it's the midweek. I think we should be focusing on the S&P and on Bitcoin. This week I'm going to Snowdon, so I'll be away for the rest of the week, so I won't have another technical analysis update for you guys until Monday. But you know, we've got Boas in the group, and we've got Trig in the group, and we've got Dave, and we've got everybody in there that is constantly putting out technical analysis on a daily basis. So if you guys don't know what I'm talking about, look in the description of this video. I've got a link for the Discord group. Should be a free link. The FODL Discord group is completely free. There's loads of education in there, and there's a group just for traders where we basically discuss throw charts and discuss technical analysis all day, every day, and we're always looking at targets. And those guys are always sharing ideas. I'm in a long, I'm in a short. Why I'm in a long, or if you're not in the trade, if they're not in the trade, they will explain why not and what levels they're waiting for. So it's like really valuable information there. So if you guys want to learn something, if you want to be trading with those guys, just join the group in the description. But in the meantime, I hope this technical analysis update has kind of helped you make sense of what's going to happen today, and it helps you stay on the right side of the market for the rest of the week. So until Monday, I hope you guys have a great week and a great weekend, and take care and trade smart. Okay, cheers, bye bye.